Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this wrap-up is for Wednesday, the 8th of September, 2021, 6:10 p.m. Central Time. You know, they say September's a rough month. Ouch. It has been a painful month, especially if you're like me and I've been on the bull side of a number of these stock indices, and I'm getting my butt kicked. Not right, these markets right now. That happens, folks. Okay. Well, how many times am I the other side? You know, you take the good with the bad, and the name of the game is you play the game. You see what's going to happen. You stay with your indicators. You stay with the way you read them. Nothing works all the time. But you're looking for things that work so much more than they don't work that how do I say this? You embed them into your trading, whatever that may mean for you. All right. We're still looking at gold in a sick way. The market's failing terribly here. We are looking at the dollar stronger. We are looking at the stock market weaken. We saw the energy markets come up because the market just sort of woke up to the fact that, gee, the whole Gulf region is still closed in on oil production from Hurricane Ida. But the ports in Louisiana are now opening. So it's just a question when everything gets turned back on. Don't forget that. What goes off comes back on. So when we take a look at these markets, and by the way, before we get too far here, I have a Labor Day special that ends at midnight tonight, Chicago time. So we're in Central Time Zone here at 12:01 p.m. The offering is over. If you're interested in the offering, it's about my research and how you get my charting course for free and how you get my enhanced Bollinger Band course for free. Just click on these icons you'll see there, and I'll talk about it at the end of this anyways. I'll keep that icon up. We had a very much fun, by the way, live webinar today. I didn't expect a lot of attendance. We got better than I thought. I think people are still coming back from the vacation. That is why, but it'll pick up now. Okay, so you're still over the 18-week average, which keeps the bias up. Now, the stock market in the month of September is notorious for problems. You get big moves down. You've had that at the beginning of the month. Starting on the 9th of September, going out about 11 days, if you're a student of the Moore Research Center and their studies, 14 out of the past 15 years, the market has rallied into that time frame. And then we'll talk about what happens another time, but that is the play. Now, that's not 100% of the time. It's about 93% of the time over the past 15 years. Does the future guarantee, does the past guarantee the future? Well, if that were the case, we'd all be billionaires. It does not. But it gives you an idea that there is a seasonality after an early break that the market tends to come back, all right? Well, we'll see if that is the case, but I can tell you this is ugly right now. The market doesn't look that damaged on the charts, does it? It's a back off so far. It's certainly not a market crash. You do have, though, a higher high and a lower low, so you've stepped out of the uptrend. The market, it looks like it wants to head back now to the 44.86 level to find its legs. Each time it has done this in the past, and I pointed that out to you, as the market has even gotten under it, it comes and snaps back, and you've gone to a new all-time high. All these time frames since June. So do I think the pattern's changed? I do not. Change the pattern and I'll recognize it. But until it's changed, it hasn't changed. The market got up to the Bollinger Band here, couldn't make it on this level, and seems to be sinking back. And momentum, I want to take you to the close of business today because that's what you care about. You're still embedded. The numbers are still over 80, both numbers. If you get a close in the red under 79, to me that ends this run in the bull market. Could the market do that and then come right back? It could. But even with the break tonight, you're still at an 81 level. So I still think the pros are buying this break. Maybe that's what's going to make that seasonality kick in. I'll tell you, now you see what I'm looking at. The NASDAQ's the strongest. You've got the fully embedded reading, and yes, you have the higher high, lower low, but it's still the strongest chart here. And until that red line's under 79 on a closing basis, I look for the market to try to make a run to the upper Bollinger Band. In the Dow, this has been one of the weakest and the market had a failure. You got a higher high, lower low. You made a run today for the lower Bollinger Band. You didn't quite hit it. You missed it by 25 points, which is missing it. That isn't getting close to it. Close would be 3 points, 5 points away. So it could still get there. We'll see what it wants to do, but it's certainly not in a trend. And today was a miserable day on the close for the Russell. The reading was under 78. You can see that. Actually, it's a 78 reading, not under it. So that loses its embedded reading. It puts into play getting back to the closest moving average when that happens of the major ones, which in this case would be the 100. If it wants to punch through and go to the 18, that'll be the next support zone, and then it has to rebuild. This does not mean the market has turned suddenly bearish. You're in a correction. How deep it will go, I can't answer you. Is it going to be a big one? I don't know. I do know that September is often choppy, real choppy. Watch TV. You'll hear all the analysts explain that. There's many reasons for it, but we've done it. We've left this easy money pattern suddenly and have broken the back of that part. In the VIX, the market got all the way up, took out the prior high, and then fell back and did not close what? Did not close strong. What about this part here? The market had been in a bear trend and it lost its embedded reading. Take a look at this. Let's see if I can get it right there. Day 1, 2, 3. You had all the numbers under those, you can see under 3 days in a row, under those readings, and now you've lost it with a 21 reading. So that qualifies that the downtrend here, the way I teach charting, is over. It does not mean you have to make a run to the 200-day average, but it's easier to go there than it is back under 1568, that I can tell you. In the bond market, you're leaking away to the downside. You made your run 2 days ago now at 163.6. Markets, and I'm talking trading days, market holding that but not giving a reason to get bullish. It's still in the bear camp. The 10-year note, waiting. I haven't seen a trade tonight come through it. You stepped out of your uptrend, but you're not in a downtrend. In the dollar index, all the way up to 92.76. Fascinating to watch that. So the downtrend that had been in play, lower highs, lower lows, got into the Bollinger Bands right here, turned away, just classic what I teach, and back to the 18-day average. Now it has to decide, is it going to create a trend, or was that the end of that move? I think it'll be impacted tomorrow by what goes on in the eurocurrency, because the European Central Bank meets in the morning. When you get up, they'll have having their meeting by 7:30. We typically hear something as to what the bank has done. It is expected that the market's going to see them tailor back some of the quantitative easing that they're giving the market. Not raising interest rates, but possibly tapering back. There's two phases they buy the bonds and securities with. We'll see which one, if either, that they decide to taper. It'll be an interesting day. If they taper, generally you get a bid into the currency that does that. So we'd get this bid, and since it makes up the dollar index is 40% weighted by this, could put some pressure on the dollar. Don't do anything. Let the bank back off as so many have, and it's probably more bearish for this and bullish for the dollar right now. In the British pound, you've come back and you're fighting right here at the 18-day average. Momentum down, trend up. You still have the higher lows, or do you? Nah. Today's low broke through there, so you got a higher high, lower low. That's why I have the arrows going like that. Bitcoin, it's gone from the upper Bollinger Band to the lower, getting a bounce, but you've really done some damage to the chart, even though people are coming out. Now, I'm seeing it everywhere. Oh, this is the opportunity to buy it. It's going to $100,000. It might. You know, when people want something like this, they buy it. It's that simple. Do I ever think it'll really be a currency? No. Do I think El Salvador using it as a currency makes sense? No. But that's what is going on. So I'm in the minority, apparently, with some of that. The Brent versus WTI crude, up and away. There you go. By the way, you do know that many, many, many years ago, tulips were one of the things that people were buying. And tulip bulbs became worth a fortune. Study economics, you'll see. The key is you have to get out before the market crashes. The people, like in a Bitcoin, that kept buying it on the way up, until it's over, it ain't over. So if you're nimble enough, I applaud these people. You know, they're buying something that has no value and creating value for it because they're bidding for it. That doesn't mean they're wrong. And if you think that's what I'm saying, no, that's not what I'm saying. They're right until proven wrong. The rest of us are the ones left on the outside. When did you buy something for $100 that went crazy in the terms that it's $40,000? I didn't, but I know people that did. Craziness. I don't know if they bought it exactly the 100. They bought it well under $1,000. So they got 40 times their money. Higher lows, higher highs. Wow. When you look at the WTI, embedded, strong. Until you lose the embedded reading, the trade is still bullish this. To get it really going to the upside, I'd like to see the 18-day cross over the 100. That could be called a bullish crossover. We'll see if it can do that. Excuse me, bad allergy day for me today. Heating oil, slipping back. Remember, tomorrow you get the EIA number. The API came out today, and if you looked at the net number, net being you look at distillates, gasoline, and crude, you have zero. In other words, you built big in gasoline, you had a nice decline in crude and a decline in heating oil, but the net is zero. Tomorrow they're looking for a net that is a negative number. So we'll see what happens if all three are down. And here's the market that just keeps running. Remember I told you that I was on Bitcoin, was it 2 weeks ago now? Not Bitcoin, Bloomberg. And I had talked about it there, that they asked what one of my favorite trades was. I said nat gas. Think about this 2 weeks ago. Wow, that market has rallied. There's just going to be a big demand for it, and you've got real problems right now because of Hurricane Ida. So you put that all together, and that is the game that you're dealing with. But the game that I'm offering you is simple. My Labor Day course specials, that's your futures course or the enhanced Bollinger course for free, runs out at 12:01 p.m. today. And it's really simple. Buy any subscription to 1 year of my research. You pay up front. You get that for free. The charting course, 50 videos, many hours teaching you swing lines, moving averages, Bollinger Bands. Then you get into the enhanced Bollinger Band course. Teaches you how to work with that, with the momentum, where you go, how it all works out. These plans start at $156 for the futures by themselves. The plan runs $159. That's $159 if you're interested in just the Spider ETF by themselves. The combo plan that adds that together, it's a couple of $100, not very much. I think it's $280. I'm giving guesses, okay? Something in that area. And then my full research, which covers in futures only, the spiders, either of the courses, not the spiders, the video, the morning subscriber video, I'm sorry I said that, the twice daily written updates, the special updates I put out during the day, and there's a lot of those, my other commentaries I put out, you get everything that I've got with that one, except access to the Spider ETF. That we always keep separate. So, how do you get it? It's simple. Do you see this right here? This icon, it's been up, and I said that the whole time. Click on it. It's not on our website. It's available right here. Click on it, sign up. It's that simple. It's right on the internet. It's very simple to do. I hope you take advantage of it because you're not going to hear this about it for maybe a long time, maybe never again. I'm Ira Epstein. You have a good day.